With what's good, traders? Happy Sunday, everyone. Want us to do a quick reflect on what happened on this week, this past week, from Monday. I think it was 24th, really 24th. I think so. Yeah. So want to see how we did a trade. I actually had a good week with 100% positions and trades. So from 24th Monday to Friday 28th. Yeah, so just to have just a quick outlook how I did approach it, how I maybe took my positions, and how come that I had 100% win rate, because last week to me was really good, other than on Thursday whereby we consolidated a lot, and that was foreseen because of the bank holiday that we had. So yeah, without any further ado, let's get started and see what we have here. So first of all, I would like to start from the daily time frame. Everything starts off the higher time frame. How I approach the higher time frame, and how did I read it? That it helped me out from the lower time frame. First of all these things need to be hid. Everything should be at its place. There we go. All these SMTs maybe should be at its place too, because we need a higher time frame cleaned up right there. All right, so this was the weekly time frame. A minute. Also your daily should be only visible daily and below. Okay, now from the weekly time frame, what was happening is we had already we were dropping lower, and somehow I was bearish, right? I was more of bearish other than bullish, but I had levels that if they were disrespected and the market would start displacing above these levels, then I would shift my bias from being bearish to bullish. But what was the structure? The structure, long term wise, we have been really bullish. For Nasdaq, we were rallying higher, but last week what happened is we dropped lower, swapped those liquidities, which we can say we had disrespected another block over here, but the market rallied lower. We swapped those liquidities, tapped into these fair value gap over here, then we rejected going high. Without rejection, I had to look for an area that if indeed we should continue lower, that the market should be respecting. And usually I mark up my immediate rebalance. So if you've been trading with me, you know I like to utilize immediate rebalance really well. Right? And those who don't understand what an immediate rebalance is, I mean, love to have it there with that color. So if you ever see a dotted line with maybe it's a red dotted line, to me that's an immediate rebalance. And what does an immediate rebalance mean? It means that most likely we won't be forming any fair value gap within this price like over here, right? There is a fair value gap here because these candles weak low and these candles weak high didn't overlap, so we have that imbalance there, so we didn't form an immediate rebalance. But as seen like this candle's high and this candle's low, we have an overlap, meaning the high is there and the low is here. So we have an overlap, meaning we don't have any imbalance, no fair value gap. So that's what we somehow refer to as the immediate rebalance. I want to look for you a good example for both bearish immediate rebalance, how it forms and then the market rallies either higher or lower. So a good example, bullish is here. This candle's high and this candle's low. The market was bullish this last week, but this week we had to drop lower, create that immediate rebalance. And most of the time you find from the lower time frames, there's something overlapping with this immediate rebalance. There is a PTRA that is overlapping with that immediate rebalance. So what the market did is we dropped lower, created that immediate rebalance, rejected higher, and the market has been bullish since then. And a bearish one, a good example is over here. The market has been bearish. So for this week, we had a rally higher right there. And you can see we did an overlap right there. Then the market rejected going lower. For this one, we formed a bullish fair value gap, no overlap. The market traded into it. We traded into it even deeper. Then later on, you can see the market expanding going higher. So in my case, if indeed I'm bearish, the one thing I want to see is to see this immediate rebalance being respected, and maybe we can have imbalances higher from the lower time frame, from the daily time frame. But at that moment in time, I want to see those PDRA close to this immediate rebalance to be respected for me to go lower towards this previous week's low. But if that fails, then most likely I'm going bullish, and my first target will be this previous week's high, and so on. So having known that, having seen that, I drop onto the daily time frame. Alright, let me ensure it's visible and below right there. So from the daily time frame, what I can see is this was the Monday candle, right? It was a bullish candle, and we had this order block around this weekly IR. Remember, this is the weekly immediate rebalance. So we had from that order block. So to me, most likely, I wanted to see a reaction into this order block, a tap into this weekly IR, which we can also see it's a daily, but more structure to confirm the fair value area will be from the lower time frame, right? So hold that thought. If you go to the 4-hour time frame, I will let you also guys see the fair value area that I use. So having drawn that order block, I want to see the market reacting to these into these order block as well as these immediate rebalance, then we start rejecting. But if we see price starting displacing, then I will be targeting the next strong liquidity, which will be this high. So this was my first targets if indeed we will be shifting bullish. And then secondly, we had these highs. Then from the 4 hour, we'll see I had that line, and also later on can have these previous week's high as the next target. So since we have this order block and we have that immediate rebalance, I needed to drop onto the lower time frame to see how maybe price was reacting within those levels right here. So this was on early Monday during the Asia session. What had happened is price traded into these we had this weekly immediate rebalance into this daily order block, and see how price was forming, how price was printing with this expansion forming fair value gaps, and also this 4 hour fair value gap. Sorry, I labeled it as a daily. It's a 4 hour fair value gap with this displacement nicely with 4 hour fair value gaps. It didn't really give me any vibes of being bearish, right? Because if it were to be bearish, with also now remember the thought I told you to hold, this to me is a fair value area because we have 3 price legs: a drop, a pullback, and then a continuation going lower. If indeed the market is bearish, then because we have a fair value within this price range, then somehow I don't really expect to have a deep retracement into it. What I want to see is only staying into this maybe 4 hour fair value gap, then we have a rejection. But if we have candle closures like this and displacements, then to me it's a sign that we are bullish. And if we are bullish, what is my first target? My first target will have been this order block right here, another block there. Then later on we can be having those liquidities that were taken. But I want to take you trade by trade how I did approach it. So on Monday, having known that we have displaced through the immediate rebalance, then to me it was now time to be looking for opportunities to try to be long. So there was my first trade. Around this moment in time, the market was displacing above this immediate rebalance, also displacing above these daily order block midpoint, as well as displacing above, forming those fair value gaps. We had this price action within here. I wanted to see the market trade into it. Maybe if we drop onto the 15 minutes, we'll see how price reacted into that zone. All right. So what did I see from the 15 minutes? From the 15 minutes, it seems that price was respecting every PDRA, right? Price was respecting majority of the PDRA. Let me first start with the 30-minute time frame. 30 minutes was displacing nicely until we were forming these fair value gap at that moment in time. So did I expect maybe a sharp drop towards those levels? No. And why so? It's because the 15 minutes time frame was giving me bullish vibes because everything was being respected. We are breaking through highs. The market was forming fair value gaps. So immediately this fair value gaps was formed. That's why I had my first position. And from the 5 minutes, I think that is clear. From the 5 minutes, all right, this was Monday. From the 5 minutes, you can see how the structures were being respected, breaking through highs, fair value gaps being respected, market pulling higher. We had this fair value gap over here, market traded into it, expanded higher. So as we were forming these fair value gaps, so that's why I did enter my position here. We consolidated, traded into, then the market expanded, giving me a good 1 to 2 for Monday. So Monday we closed positive, and now again we go back to the 4 hour. Remember now, since we have predetermined at the higher time frame, since I have the higher time frame predetermined for me, and I've already seen that indeed the market is bullish because by that time, by Monday, this was the last candle of Monday. Our TP had been hit, right? This is doji. That was the last candle for Monday, and our TP had been traded into. So I'm out of the position. So 2 are locked in. I wait for Tuesday during the New York open session. So we have seen this displacement, which confirms. Remember, this is now Tuesday. I've already seen price action that played out on Monday. I've seen some displacement above the midpoint of this daily order block. We have seen displacement above that weekly IR. We are forming also displacements with fair value gaps within this area. We are disrespecting a fair value area. Now I'm really locked in to be bullish, right? Having that in my mind, now I want to be looking from areas that I can be buying from. So I think, because these are 4 hour, I think I had it, maybe I had it moved this 4 hour. I think this is what I mean by the 4 hour fair value gap, not higher. I think it had moved. There we go. So having these price action before, so I needed to label the first 4 hour fair value gap, this one, as well as this 4 hour fair value gap. Sorry guys that I did label it as a daily fair value gap, but in real sense it should be a 4 hour fair value gap. And also we had this 4 hour fair value gap here. Seeing that, now waiting for New York open and see how New York prints out, and then see how we can react to the market, or how I can react to the market. So during 9:30 open, this was the 9:30 open, what happened with this candle? We had a drop into these 4 hour fair value gaps, and you can see how the bodies were respecting this 4 hour fair value gap. Guys, let me change it because it seems myself I'm getting confused. Let me have it as a 4 hour FG right there. So having seen this, that the 4 hour fair value gaps are being respected because we wicked into this. Remember, we to do the damage, but the bodies tell the story. You can see how the bodies were nicely respecting this for our fair value gap. We are also sweeping liquidities, which were major zones liquidities. Let's see whether these scale zone of mine will give me those scale zones. So this was the London lows. They were swept. Asia lows. During Asia, we had consolidated, so nothing much in that session, but the key levels were this for our fair value gap and how price will react into them. We tapped into this at alone, we consolidated, 930 open, dropped lower, tapped into those for our, rejected nicely, and with those rejections, it was time now to be dropping onto the lower time frames to see what or how price was reacting. So from the 15 minutes time frame, what was I watching for? So we had dropped, we had from this fair value gap over here, so we traded into it nicely with this candle, then we drop off that. My setup usually is immediately we start seeing displacement above, right, above the candle that traded into this fair value gap. That's when I'll be trying to look for positions, right? So if I was to follow that system 15 minutes without dropping onto the lower time frame, then this would have really been my setup, because this one closed, so I would have entered maybe at the open of that candle, and my stops will have been below this candle, and have a 1 to 2. Yeah, that will be my trade if I wouldn't really have dropped onto the lower time frame, if I was only considering the higher time frame, that the 15 minutes. But I decided to drop lower to the 5 minutes, and sorry, and read price off there. So I decided to drop onto the lower time frames. Yeah, so this was the 5 minutes, so I drop onto the 5 minutes to do further refinement, to get some good entries, and maybe see how I can maybe be in the market earlier on, other than maybe when the market has already moved. So I also refined to this fair value gap that had already been traded into. You can see I had marked up this high, the 5 minutes high that traded into this 5 minutes fair value gap. So I was watching if we could have had nice displacements of these levels above it, but we tapped into that, a drop which was nice with the OTE price leg of this move. Then wanted to look for displacement above this level. I would have entered at this immediately. We closed that, but I think I based that entry from the 1 minute. Let's see what the 1 minute actually has for us. Yeah, this one. So this is the 5 minutes candle that traded into that high. So the market dropped to the OTE. We have these fair value gaps below here. So I don't know whether I should have been confident maybe to enter here, but that wasn't really my setup. I wanted to see some displacement above these highs over here. And at that moment in time, we had lots of SMTs. I've deleted them. So we had an SMT within these price leg, and immediately we had displaced above that level, creating this market structure shift. Then I entered my position there with my stops there. We consolidated within the entry point, but finally the market displaced, giving us a 1 to 2 R. So the same idea from the higher time frame of the 4-hour time frame. You can see how the midpoint price was ranging between the midpoint of that order block. Then immediately we broke through, the market just expanded bullish. So Tuesday was done, and that trade sorry, okay, all right, here we go. All right, so Tuesday was done, and now come on Tuesday, Wednesday. So Wednesday, you can see from the daily time frame how that had confirmed bullish prices to me. Right, there we go. So Tuesday had already confirmed bullish prices because we're respecting the midpoint of that daily order block, rejecting nicely. We have already closed bullish. So to me, I'm more of bullish other than even Monday and Tuesday. So the target was this, and then later on we could target these highs, and later on, as you can see, those. And remember, we used the immediate rebalance, the weekly immediate rebalance as support, because we traded into it, tapped onto it, and then we rejected. Other than it being respected to push prices lower, it was used as support to push prices higher. Now come on Tuesday, Wednesday, after Tuesday has printed out. So what did I see? And this was Tuesday actually. Afterwards, we traded into that 4-hour fair value gap into the IR, and then we displaced, and this was the candle where we got a 1 to 2. On Wednesday, this was the candle that I got the expansion of it, the 9 a.m. What the market had done is we were displacing nicely. This are now disrespecting this bearish order block, and because we had traded into it, if we were to be bearish, this order block should have pushed prices lower, but prices was displacing, going higher. We found that 4-hour fair value gap there, which to me was a specific level that I wanted to see price react from it. And the good thing is we had seen that the market had already tapped into that with this candle. Then this candle swept the 4-hour candle low, the prior candle low, and we displaced bullish. So with that displacement bullish, to me, I was more of a bullish, because now we have seen the specific signatures that I am looking for. So we have those liquidity sweep, liquidity sweep over here into a key level. Though we had a 1 hour fair value gap here, I was really careful. That's why I took my positions at this moment other than this, because I needed more confirmations, because the market maybe might sweep, tap into this 1 hour and then continue higher. So during 9:30, this was the 9:30, we opened, rallied higher, didn't really take those highs that I was aiming for. You can see this candle's high, we rejected lower. With that rejection lower, I needed to identify why is the market dropping lower. So I dropped onto the 5 minutes time frame. Sorry for these. There we go. So where was the market? Had the market dropped that lower? So yeah, these we'll talk about this Thursday. Thursday consolidation. All right. So as of Wednesday, the specific levels, remember the 4 hour fair value gap, we had already swept those liquidities here. To me, this fair value gap didn't really push the market into this lower. Whatever pushed the market lower were these liquidities that were about to swap. The market had rallied during 9:30. That I didn't really trade with prior, because at 9:30 there is a volatility, and usually I want to see that volatility go against me, right, against what I'm intending, so that later on the real move might be happening. So what happened at that moment in time is 9:30 dropped lower, tapped into these. We can have fair value gaps and order blocks. To me, I was watching for maybe a retracement to the OTE. Retracement to the OTE. Now, how can I apply my criteria? Remember, guys, we have already swapped liquidities. There's no need. These are protected low because liquidities have been swapped. We had retracing to the OTE levels. So my main thing is we want to see rejections of these levels. So we found those 5 minutes fair value gap. The market traded into them, dropped again. We didn't even sweep this low, but I think for US 500 we swapped. So we found a nice SMT here. So for me to be bullish, I wanted to see the market breaking through those highs. I would have maybe further refined to the 1 minute, but I remained from the 5 minutes, and yeah, immediately we broke through that high. I had my entry at this moment in time, then traded into, market expanded higher. As it expanded, I guess I added another position. Let's go to the 1 minute. I added another position onto this. Yeah, so I also utilized the 1 minute breaker block from the low. Remember, this is the high. I want to see it being broken, but I saw off that levels after sweeping liquidities over here, and these lows being maintained. Now also sweeping these lows, we were forming a low, high, lower, low to sweep those liquidities, and we had another new high, high. So this to me was a breaker block. We formed also a fair value gap within it. So immediately this fair value gap was traded into, and these candles confirmed closing bullish. That's where I entered my position. We rallied, then I dropped lower to sweep those liquidities. Then the market expanded nicely. As we were expanding nicely, wanted to see a breakthrough this high. Right, also to confirm the 5 minutes structure break. We were forming nice fair value gaps. So immediately this break was confirmed with a fair value gap. I entered my position there with another 1 to 2, and that's how that day I closed up with a 4R. So remember, now Monday we have a 2R, Tuesday 2R, and now Wednesday we have a 4R, because this second candle was confirmed. Immediately we were displacing above this level after respecting the 5 minutes fair value gap. To me, I was leaning more of bullish. Yeah, I exceeded my target and those highs, but that was because I knew that the market was so bullish. With 1 to 2, yeah, they were hit. Then from there the market consolidated for a whole lot of Thursday. And Thursday, why? Because we had a bank holiday. I was here with my friends trading live, and somehow we had this 4 hour fair value gap that wasn't really traded into. And at that moment in time, if I can take you to the 5 minutes, we juggled maybe a trade position, which we told ourselves like it wasn't really high probability position. Let's see whether price can play out during the bank holidays. But also something we did notice is lots of spreads within these price action over here. So price was disrespecting bullish fair value gaps, was again respecting them bearish fair value gaps, I mean. So price action was so messy within these. So immediately, even if we took this position over here, it was after we had disrespected that, and we had this formation of this bearish fair value gap with a small risk. I tried this, but I only lost $9 within these price leg because of even spreads. My stops were hit within this move due to the spreads that were in the that were due to SME shutdown and also the bank holiday. And then I didn't notice that until after I finished trading, and that's why we can see we had messy price action over here. But it was an L, $9 loss, and that's how the market consolidated. Now came on Friday. On Friday, we had SME group shutdown. But to me, I was kind of seeing price being more bullish. Remember, guys, I have been bullish of that daily order block, and now I want to see higher prices. And my next target was these fair value gap over here, this 4 hour fair value gap. Then later on next week, I'm expecting to see those relative equal highs being taken. So at that moment in time, we had this 4 hour fair value gap over here. You can see it, and it was prior to the New York Open. So I wanted to see how price will go to this area. So I dropped onto the 1 hour time frame, and from the 1 hour time frame, I had my liquidities levels on. I didn't notice London consolidating, though it wasn't really in it, but we had that gap. And also this 4 hour fair value gap was the key major level that I was watching for. So during 9:30, right, the market did the reversal. We pushed higher first, then we dropped lower into those 4 hour fair value gaps. So after tapping into those into that 4-hour fair value gap, then I wanted to see some nice reaction. And guys, if we are bearish from this with this rejection during the 9:30, then we shouldn't really want to see some price closing so bullish, right? I want to see, due to this rejection, a continuation going lower if indeed we are bearish, but that didn't happen. I drew this last down close candle. You can see a line there. If we see a breakthrough that, then to me I'm more likely expecting to see higher prices. So of that, of the 4-hour, I had that line label there, and candle was starting to print bullish, which is if we are bearish, we shouldn't really be seeing that, because we have already swapped liquidities. The market has rejected lower, then we should have a continuation going lower. But if we see bullish displacements, then I was to take that position. So we saw this candle close above, we retraced, swapped those liquidities, pushed back high again, dropped to the OTE, performing nice SMTs as we were closing around this level right here, because this is a red line that I drew from the 15 minutes. I dropped also further to the 1 minute to have a clear read of what price was actually doing. And I had a pre-recorded video which I've already posted, so you can go to my TikToks and Instagram and maybe see how I interpreted this price action, but I'm gonna also interpret it. So at this moment in time, we displaced above, I dropped to the OTE from the high, as you can see this line, to the low of this, drop to the OTE, respecting this 1 minute fair value gap, sweeping liquidities for NASDAQ, but US 500, S&P 500 wasn't really sweeping, and now immediately we started disrespecting this bearish array with this candle closure above it. I wasn't into trade, even though we hadn't really closed above that red line, but I wanted to see if we displace above it, then I'm actually right. So the market got an early entry before this level was traded into. Then the market expanded lower. As we created this market structure shift, I shifted my stop loss to break even, but again immediately I hoped these fair value gaps will hold, but the market took me out. Then later on, after taking me out, that's how the market displaced, and you can see finally we ran it back to even break even. Again later on we started displacing, going higher, and the full TP hit. So those were the 6 trades for the week. If we count also on Thursday, yeah, that one small drop that we had. So on Monday 1, on Tuesday I had another 1, on Wednesday we had 2, so those are 4, Thursday 5, and Friday 6. So somehow we had 6R minus 1, so those were 10R minus 1R, those were 9R for the week. Closed up the week 9R, but has been a good price read, although we had SME group closing on Thursday, which really provided uncertainty, and now we actually got a position also on Friday, though it was a break even. Yeah, I shouldn't be counting that, because it should be now 8R, 4 positions which were winners and 1 loser. So 8R minus 1R, which is 7R for the week, because the last one was break even. It was to give me a 1, 2, 3, but that didn't actually manifest. So that was last week, and that's how I did read this price action, and I think it was a good week. Let's see what we can be expecting these rest of the remainder part of the week. Though we are in December, I will be conservative somehow. And guys, if you have any question, right, feel free to ask, and also let me know something maybe I can do videos on, and then we get to learn together. So guys, for now, let's prepare for another week. I will be doing maybe another video on what I'm expecting this coming week, and looking forward to hear from you guys. So until next week, guys, be safe everyone. Bye bye.